Think like Warren Buffett, a beginner's guide. Hook. What if I told you that the biggest difference between Warren Buffett and the average investor isn't money, it's patience? Think about it. Every day, millions of people chase the next hot stock, panic when the market drops, or buy simply because everyone else is buying. Yet, one of the richest investors in history built his fortune doing almost the exact opposite. That raises an important question. What if becoming a better investor starts with becoming a better thinker? Let's explore that. Imagine you're walking through a supermarket. Your favorite brand of coffee suddenly goes on sale for 30% less than usual. Most people would celebrate and buy more. But when the stock market puts great companies on sale, many people do the opposite. They run away. That simple contradiction reveals one of Warren Buffett's greatest lessons. Successful investing is often about controlling your emotions more than predicting the future. Buffett has never claimed to be the smartest person in every room. Instead, he's mastered something far more valuable: emotional discipline. He understands that markets move on fear and greed, but wealth grows through patience and rational thinking. One of his most famous ideas is the circle of competence. It simply means this: don't invest in businesses you don't understand. You don't have to know everything, you just need to know enough about a few things to make intelligent decisions. In a world obsessed with doing more, Buffett teaches the power of knowing your limits. Then there's the magic of compounding. Imagine planting a tree today. It doesn't become enormous overnight. It grows quietly, year after year, until one day its shade covers an entire garden. Investing works the same way. The longer you leave quality investments untouched, the more powerful compounding becomes. That's why Buffett often says his favorite holding period is forever. But here's what most people miss. Buffett isn't really buying stocks. He's buying businesses. Before investing, he asks questions like, would I be happy owning this company if the stock market closed for the next 10 years? Does this business solve real problems? Does it have honest leadership? These questions shift your mindset from gambling to ownership. Another powerful lesson is learning to ignore noise. Every week, headlines scream about market crashes, recessions, or the next big opportunity. Buffett treats much of that noise like background music. Instead of reacting emotionally, he focuses on facts, value, and long-term potential. This approach isn't glamorous, and that's exactly why it works. Building wealth is usually boring before it becomes exciting. It's choosing consistency over excitement, discipline over impulse, and patience over panic. So if you're just starting your investing journey, don't worry about finding the perfect stock tomorrow. Focus instead on building the mindset that creates wealth over decades. Read more than you trade. Save before you spend. Invest in businesses you understand. Give compounding time to work. And above all, remember that the market rewards those who think clearly when others are ruled by emotion. Warren Buffett's greatest investment may never have been a company. It was the habit of thinking differently. If this perspective changed the way you see investing, let me know in the comments. Which Buffett principle will you start applying today? If you enjoyed this episode, don't forget to like, subscribe, and share it with someone who's ready to think like an investor instead of a gambler. Until next time, keep learning, stay patient, and keep investing in your future.